Hey guys, Jose Baeza here and welcome to this video on funding programs. Today we're going to talk about a couple of different programs. We're always adding programs to our business, but these are some of the programs that are mostly popular at the moment. One of the programs that we specialize in is in term loans, okay? Term loans, we offer term loans on the personal side. And we also offer different lines of credit. So we specialize in two programs, term loans and credit lines. We offer many more, but term loans and credit lines is our primary focus. We can go ahead and get up to $350,000 on a term loan and up to $350,000 on a line of credit. Okay, and I will explain to you guys the difference in a little bit. But a term loan is given to an individual based on two factors: their personal credit and also their personal income. What I mean by personal income is that many people that come to us, if actually all of the people, will either want to start a business or they have a business, and some of them will have revenues, business revenues. Our term loans, we don't focus on the business revenues, and that's very important. We do not focus on the business revenue when it comes to a term loan. A term loan is based on the personal credit of the individual and the personal income of the individual. That means that if we have a client that does not have a business, but yet they have a job and they're earning income, we can help them. If they have a current business and out of that business they're paying themselves, so it shows that they are earning personal income from their business, we can help them. If we have a client that has good credit, meaning a 680 FICO score or above, and they don't show any income whatsoever or very minimum, like maybe $10,000 a year, unfortunately, this program will not work because this program is based on their personal credit and on their income. Okay, so their personal income. Now, there's another program, the lines of credit. The lines of credit is solely based on their credit, their personal credit. Their personal credit is crucial. They have to have a minimum of a 700 FICO score across all three bureaus. We're always looking at all three bureaus, not just one. There's three major bureaus: Experian, Equifax, and TransUnion. We need to have consistency between all three of them. Not all three have to be the same, but they have to be around the same. If one of them is a 650 and the other one's a 700, and then you got another one at 700, keep in mind that even though that's the case, that's good, but there's a reason why one of the bureaus is at 650. So we will go ahead and take a look into that, okay? When it comes to the funding programs, we require one thing that is always a must, and that is a copy of their personal credit report. That's the main focus, getting access to that personal credit report. Do we need their tax returns eventually? Yes. Do we need their bank statements? Yes. But do we need them right away? Not necessarily. We're always looking for the number one goal and the number one thing, which is their credit report. Talk to your manager as to where do they need to get their credit report, but primarily right now we are always looking for their credit report, where sometimes it's going to differentiate. For example, when it comes to a cash advance or maybe other programs, we don't necessarily need to see their credit report, but for term loans and for credit lines, we're always looking for their credit report. Okay, I want to make sure we're clear on that. Secondly, when it comes to a line of credit is given to the individual based on their personal credit. So notice how these two programs will always be requiring their personal credit. Okay, so we do not look at the business revenues, and we do not look at their business credit, not for these two programs. So number one, again, get their personal credit report, and then we can go ahead and give them a quote. Okay, here are the qualifications for these two programs, and they're very similar. So that's the reason why I'm going to go ahead and provide those these two requirements for the same type of program in essence. Number one, we need to have them they need to have a minimum of a 680 FICO score for the term loans. They need to have a minimum of a 700 FICO score for the lines of credit. But they also need to have less than 30% debt to credit ratio for both, less than 40% debt to income ratio, and an average of around less than 5 credit inquiries within the year on their personal credit report. And also they need to have a minimum of at least 1 year to 2 years minimum of credit history. Credit history is important. They also have to show some sort of responsibility in their credit report, meaning that they need to have some open accounts on their credit report, because if it's a brand new account, again, how can we help them if it's brand new? We could have an 18-year-old with an 800 credit score, but that's because they don't have any accounts yet. Does that make sense? Perfect. So the next thing is that they need to go ahead and go through the process of providing you the credit report. Now, all of these requirements have exceptions, okay? There's exceptions to every single rule, but keep it easy. When you're explaining these programs or these two programs, to make sure that the primary focus is to get their credit report. Getting their credit report makes a heck of a lot of a difference, because then we can go ahead and send those over to our underwriters. But make sure that the credit report is a minimum of a 680 FICO score. If it's less than a 680 FICO score, then we would refer them over to either a cosigner or credit repair. Okay, or we can go ahead and push them through a different program, which would be either a cash advance or it could be a collateralized line of credit. Okay, because again, the lenders their main responsibility is to make sure that they receive their money back. So again, we just to reiterate, I need their credit report. We need their credit report. That's the main focus when it comes to any type of program. We also have a cash advance. Okay, a cash advance is basically that's going to be based on their business revenues. It is not going to be based on their personal income, because otherwise that would be a personal cash advance, and we don't do that. We only do business cash advances, so that would be more. And that cash advance could also be called working capital. But a cash advance is going to require for them to have at least some sort of revenue coming in. And the rule of thumb is that we can give them up to 110% of whatever revenue they're making. Okay, make sure you guys are taking notes. It's going to be up to 110% of whatever they're making on a monthly basis. And that's how much we can provide them in a cash advance. Sometimes you do not want to let them know how much money we're going to give them, even though you have an idea, because we might make exceptions. But again, when it comes to a cash advance, the requirement is going to be very simple. The requirement is that we do need 6 months, 3 to 6 months per business bank statements for the cash advance. Why? Because we want to know how much revenue they're bringing in on a monthly basis and how much is going out. Another thing, we need an application. This is going to be a separate application. So the application is going to be a cash advance / funding application. It is not going to be the term loans or the line of credit application. Is going to have its own application. Speak with management or one of the managers so that you can get access to this particular application for this cash advance. And then secondly, we're also going to need either their credit card processing statements, or if they're not processing credit cards, we need to have some sort of statement of where they're bringing in their payments. If they don't have any, that's fine. Their business bank statement should be sufficient for us to give them a quote. But that's pretty much it. The next thing is a collateralized line of credit. Collateralized line of credit. A collateralized line of credit is going to be given to the individual based on partially their credit, but it's going to be mostly based on the collateral, whether it's be real estate, property management, property that they own, or it could be a boat or a car, something that has a value more value than what we're giving them. Okay, that particular loan is unique. So with one of the sales managers will be going over this particular program in a different video, and they will let you know the requirements, but just keep that in mind that it's a separate program. It's a collateralized line of credit. And then we also have a revenue-based line of credit. A revenue-based line of credit will also require a separate application, and a revenue-based line of credit will require some sort of income on the business side. So we will need their bank statements as well. And again, for that particular program, we also need to see their credit report and a different application. So also see management for that particular program requirements. And last but not least, one of the other programs is that we also offer funding for like private lending. Private lending, we don't necessarily specialize in that, okay? The private lending sector is a very completely different animal. We do have access to private lenders, but that is something that we outsource at the moment. So when it comes to somebody that's looking for private money, private investors, you can send that over to management, and we personally handle those deals ourselves along with our partners that are in the private money sector. Those deals can be tough sometimes. Usually they can take more than 60 days depending on how much money we're looking to raise, and the amount of funding that that go into that sector, it's usually millions of dollars. The minimum on private money is around $600,000. And the maximum is around $300 million, okay? Again, the commissions on those deals are gonna go on and off, so we do not have a commission structure for that, but definitely speak with management on that, because that's on a deal-by-deal basis. Because sometimes, if we have to negotiate with the lenders, if we have to negotiate with whoever's doing it, again, our solution, or what we specialize in, is raising capital for entrepreneurs. So we have solutions, but sometimes we have to be very creative to go ahead and create those solutions. When it comes to people that don't necessarily have excellent credit for any of the programs that I just mentioned, again, we have different solutions. Cash advances don't have necessarily a credit requirement. Lines of credit usually do. Private lending, sometimes they don't because it's collateralized. But if someone doesn't have excellent credit, or at least good enough credit, we can go ahead and do what we call a credit repair. And we do have a credit repair specialist that works with us, and they specialize just in basically looking at credits and repairing them so that they can get them ready for us to go ahead and fund them. If you have any questions on that particular program, always reach out to management as well. Someone in the management team will explain the program. I will go over the program a little bit. That is something that we require, obviously, their credit report first. Go ahead and send it to send it to processing@efundingexperts.com, and then request a quote for a credit repair. If somebody doesn't meet our criteria, again, go ahead and send an email to check out the particular credit report, and then we can see if we can help them with credit repair. And then you should have received a spreadsheet or a list of different credit repair programs along with the commission structure, and you can go ahead and refer to that sheet if you have any other questions. You don't need to necessarily know anything on credit repair other than the price and also an idea of how it works. And it normally takes about 90 days for the credit repair specialist to get them some results, because it isn't a 30-day process, meaning that every 30 days the bureaus will update the report. So if we do something this month, we won't see that until next month. So we always like to tell people that it's about a 90-day process. It is $120 per month, but there is that one-time first month fee, which again, refer over to your commission sheet and to the pricing pricing sheet so you can take a look into that particular program. Once you look into that and you pick that, keep in mind that in addition to that first fee, there will be a 120 maintenance fee, which is just enough to pay our consultants, or I'm sorry, our credit specialists on a monthly basis to maintain the account. And go ahead and do that. There is more programs that will be added along in addition to that, but we will go ahead and create more videos and add more videos as more programs come in place. Again, this is Jose Baeza with Efunding Experts. I'm glad to have you on our team, and I'm looking forward to helping you guys succeed. Thank you.